trade openness, is one of the most open and globally leveraged economic blocks of the world. The exchange rate matters, but it doesn't matter in isolation. In other words, you can sustain a foreign exchange strength when global growth is this broad-based, when there is so much positive momentum and so much positive spillover happening. Europe is placed very well. And there is a lot of pent-up demand. Let's remember, Europe just got out of a recession 2-3 years ago. We are much earlier in the cycle. So exchange rates matter, but at this stage in the cycle, they matter less.
And also confidence is much higher in Europe. I mean, you look at these surveys, we're seeing that, you know, oddly enough, after, you know, all the worries in 2016 about populism, I think one thing that populism has actually done is it's united Europe in a way that we haven't seen in many years. United on sort of the central view of being part of the euro and facilitating growth in trade. So I think there's a lot of confidence in Europe, and that I think is more important for European growth right now than the foreign exchange rate, and that's why I think this could still keep going.
So let's get to a couple of trades. If euro-dollar seemingly is going to head further north, can the equity market appreciate with that? Because it has done. Stock 600 through 400. We're back to some multi-year highs on several of these benchmarks across the continent. Can we continue to see that, Alessio?
Interesting point, because the outperformance of European equities last year, which was minimal, but it was really coming mostly, more than half of that performance came from the foreign exchange. So this growth re-rating of Europe in terms of price action in equities has actually come mostly through the currency. Now, the problem for European equities is that there isn't enough tech. If you break down the sectoral compositions versus the US,
financials.
Exactly. In other words, is the tech sector here in the US benefiting more from the growth story in Europe, given how much foreign revenues tech has from here? That's where the story is. Now, if we think about how commodities are on the rise and how CapEx globally is on the rise, the old sector in Europe may actually play catch-up.
And PE ratios in Europe are actually at average levels. PE ratios in the United States are about 15% above average. So, you know, it's still not expensive in Europe, and it is getting a little bit expensive here.
Something else on the rise is US futures, bid across the board. As you hear the opening bell ring in New York City, we are bid up 9 points on the S&P, positive 82 on the Dow. If you look at the FX move, euro-dollar through 125 a little bit earlier, very briefly, now 124.84. And Treasury's just on offer at the margin, yields higher by a basis point at 266. I imagine the administration, as they go to Davos, Switzerland, are very happy with a dollar at a multi-year low and a stock market at a record high. So that's the price action on the screen right now. I want to get you some movers and cross over to Julie Hyman. Jules.
Well, we've got a lot of earnings, of course, that we continue to watch. We've been